Traders, Dennis Wilburn, the AutoPilot Trader. I don't want you to be one of the traders that gets caught up in the meat grinder of trying to pick a bottom. That's why today I'm going to share with you and let you know to stop buying stocks until the market shows you these three triggers. And I'm going to share that with you in today's session directly. If it's the first time you're joining us over on the YouTube channel, hey, subscribe, hit the bell, share the information. I want to make sure that as many people as possible don't miss this market when it does turn around back to the upside, because that's the point where we can generate some real wealth. So let's go ahead and jump into today's session right now. Well, folks, as we saw yesterday, the Fed is taking aggressive action to try to control inflation. You know, is it too little too late, or is it basically going to, what they do with these historic raises in the interest rates, is it going to basically just derail what's left of the economy and make it even more difficult to basically come out of it? Reminds me of what happened, well, I wasn't around, but back when the Great Depression, 1929, the market had started to come out of the Depression. It was doing fairly well, and then government intervention came in and actually put the market into further downtrend that lasted for another year and a half. Do you think the government has learned its lessons back since 1928 and 1929, 1930 time frame? Or do they still prone to making the same mistakes they made back then? Hey, a real quick reminder, all materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. And of course, past performance is not an indication or promise of future performance. One of the quotes that I really like is a quote that was from Jesse Livermore, and it's this: don't take action with a trade until the market itself confirms your opinion. Being a little late in a trade is insurance that your opinion is correct. So what that's telling you, if you're a trader who over-anticipates bottoms and tries to pick the bottom, basically Jesse is saying, don't do that. You know, wait for the market to confirm that it's basically reversing. After the market does reverse and goes back into an uptrend, if it's a strong uptrend and not just a relief rally to a bear market, which we're getting a lot of those lately, then we basically can count on that being a potentially great trade. In other words, don't be an impatient trader. Those are words from Jesse Livermore. Looking at our indexes today, how are they doing? As we said, Fed has come out and said, hey, we are going to fight inflation tooth and nail, blah, 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 blah. Historically, 3.75 rate increases for the Fed rate, which is fairly significant. Again, it's historic, first time ever. They're looking for the potential of making the target rate or the terminal rate, what they call it, by the end of the year, 4.5%. Typically, when interest rates rise, it has negative impacts on the economy, negative impacts on employment, and just significant impacts from basically recession and inflation. So we want to be watching out for that. But at the same time, though, it's going to give us a great opportunity going forward to start planning trades. But as we see here with the spiders, what's happening with this? I did a projection down on the spiders that I showed everybody earlier. I took from this high to this high, and then you extend it from this low to this high here. As you can see, we blew through the 100% symmetric move, and we're approaching the 1272, which is down here at the 371 level. Will that be the place we bounce? Positives on the spiders daily chart. On the momentum indicators, I've got a three-line cluster on the market forecast. What does that typically tell us? It tells us that when we get a three-line cluster, normally within 1 to 4 trading periods after getting the signal, tends to be a reversal. Now, will it be a reversal just to a rally up to past resistance and then a breakdown from there? We won't know that until after it happens. The big question we're going to have to ask, so will it be tradable? And do we even want to take a trade on it? As you see over here on the weekly chart, the momentum indicators are still pointing down and not trying to move back up. So we have strong support down here at the 371 range. Next after that, we're looking down here at the 365 to 360 range. I would, and I am, going to identify those as levels of support where we could potentially bounce. I will put in alerts in that area down there. So if it goes off and I'm not watching the chart, I'll be able to go in and check the chart out and say, okay, yeah. And then I look for what we were talking about that I'm going to share with you a little bit later about the 3 items to look for, 3 triggers to look for as the stock market bottoms out. I want to remind you that I have put together a really good tutorial about knowing when it's what to do in a bear market bottom and what they look like. I'll put a link up here in this corner up here that will basically take you to that video. It's really a great video to be aware of and be prepared for. Even if the market continues in a bear market specifically for the next year and a half. I mean, it could happen for a year and a half because oftentimes bear markets last a year and a half to 2.5 years. And we're only, not even a year into the current bear market. So we could have some more exceptional downtrend. The downtrend continue and downside potential. So with that said, how bad is it? That's another question we have to ask ourselves. And I do a little bit of a study, as you can see here. Right now, the Dow is the only index that is not in bear territory. The S&P is now slipped into the bear territory. NASDAQ, note, being ripped to the downside stronger than any of the other indexes, down over 30%, and the Russell is really close in the hills, down 29.95. Really pleased with the active trend trading AutoPilot service. We're up 35.3%, and we're beating the S&P by 56%. So oftentimes people will get where they want to take action based on the markets being down this much and do what they call buying the dip. And if you're trying to buy the lows in a bear market, friends, you are not buying the dip. That is not what is the definition of a real dip. You're basically just buying. It's okay, and it's okay to buy a bear market rally, but recognize it's probably going to fail, as we've seen happen numerous times, going back all to the big way to the beginning of this year. It failed here, it failed here, it failed here. So we push down, we break down that low right there, and then we look for it, and it also failed right there. So that's what we got going with the NASDAQ, or the S&P. Let's see what's going on over with the NASDAQ as represented by the Qs. As you see, it hit its downside trajectory and is holding right there. Past level of support. Is that going to be strong enough to hold? Well, to me, it doesn't look like it is probably. And so we may get a projection down to the 272 level. 272, we pass through that. That'll put us back below. If we get to the 272 or slightly below a 270 level, that puts us below the 200-week moving average, which is even an additional a level of weakness that the NASDAQ and the technical stocks would have to make their way through. As you see, we are well below all the moving averages on the daily chart. And so what I'll do on this is I'm tracking the, as you can see, I'm tracking the 8 in the 50-day moving average, and up here's the 200-day moving average. Everything is well below that. When the situation is like this, we could look for a reversal and a pullback up into resistance. And right now the resistance is, last time it tested, got above the 50-day moving average and then failed to the downside. The positive side that we see with the NASDAQ, though, is
three-line cluster, and like the S&P that I didn't mention, I've got a very nice, let me find it here, I've got a very nice positive divergence going on right there on the TSI. Now, just because I have positive divergence doesn't mean this is going to flip around to and do a roaring move back up to the upside. But what it does mean is that it's going down on less momentum than daily momentum than it was previously. Still have the weekly momentum heading down, but again, where's it going to come to rest? And that is part of the deal that we want to make sure that we check out and identify those levels where we could stop and then have an alert go off and then go in, look at the charts, and ask ourselves, and here's the three questions in case you're waiting for them, the three triggers that I look for to know when the market is going to turn around. And what are they? Well, one, is price action at a level of support? And the answer to the question, and where would it be at support? So it's at support where it's at. It would be also at support down here at the Fibonacci level where that past price action was. And right down here at this low over here, it's about the 269 to 270 level. Those are the levels of support. Where's my resistance at? Well, excuse me, moving back up the other side, project down a main portion of resistance would be at the 20-day moving average. Note the 20-day moving average is going to continue falling, excuse me. So it may be down at 294 tomorrow, or it may, and the next day after that, it may be down at 292. So anticipate a move back up to that. Let that be a line of demarcation for any upside targets. So number one, are we at support? And so the answer to that is yes, we are. Then trigger number two, do I have a bullish candlestick reversal signal, such as a hammer and or a bullish engulfing and or a bullish harami or a piercing line? And then the answer to that on the daily chart is no. No, I do not. And then last but not least, on the daily charts, has the momentum, one of the momentum lines shifted back up to the upside? And the answer to that is no. So until that happens, I really don't want to be taking action to buy stocks. One of the things to look at in your off time is go back and take a look at what has happened in the past when we finally got a reversal signal and we pop back up. And normally you get these zigzag type formations over a month's period of time. Look at it, gives us one opportunity here to get in here, another opportunity to get into the position here, and then lastly another opportunity to get into the position here before it went on one heck of a nice run with the Qs. Watch for that type of formation where it's kind of like going into a constructive phase where it builds up, falls back, builds up, falls back. All the time the momentum is shifting back to the upside. Big times to look out for is the market forecast, dark green line, that's the intermediate forecast, crossing up through the positive 20 zone, and the waiting for the TSI to actually cross back up to the upside also. And those will stay in effect. And I'll just show, here's a little secret here. Those will stay in effect until you get this. Until you get it where it bounces back down. And look at that. Momentum broke back down right there. That at a level of resistance. That was the signal to jump onto the trade. So just a little bit of information there. And last but not least, I'm going to talk about IWM. What is it? IWM showing us similar type situation, except IWM is going to, you can see, just broke through the 100% extension line.
And once it breaks through a Fibonacci line, that increases the probability that it will probably continue down to the next Fibonacci line, which puts it at a level of 167. Look then to your right, correction, to your left. What's happening at 127? Well, you've got that low there, that low there, that low there, that low there. Aha! A pretty solid level of past support. So again, I want to put an alert down here at about the 167, let's say 167.50 level. I think is that about right there? Yeah, 168.50 actually, 168. And if that triggers, go to the chart and see if I have a reversal signal, because that I trigger my alerts at potential levels of support. Then I go look for the other triggers to see if they're in place. That's the bullish reversal signal and the cross-up of the TSI. So that's what we've got going with the Russell. Russell looks like it wants to, again, fall back down. Look over on the weekly chart. If it doesn't stop at the 167 level, nice looking level of support at down here at the 162.81 level. Look to your left. That's a gap up. So yeah, strong level of support in those areas. If prices get down to that area on the indexes and then reverse, that's a good sign then that we want to continue to look for the stocks to trade, but get the indexes going in a bullish direction, and that will increase the probability that the bullish trades on stocks we take will also go in the correct direction. So that's all I've got for today. I hope that you found that beneficial. And remember the 3 items that we are taking a look at and the 3 triggers. Okay, remember 3 triggers are: 1, at support. Maybe multiple levels of support, and the next support level may be the next one down or the next one down after that. So at a firm level of support. 2, a candlestick reversal signal, which is a hammer, a bullish engulfing, a bullish harami, and or a piercing line, or it could also be a morning star type of candlestick, are multiple dojis at support. Those are all reversal signals on the candlesticks. And then last but not least, the momentum actually shifting up to the upside, getting that cross, especially when you're in a significantly big market, get that cross, and that gives us a good indication that momentum is at least shifting back to the upside for at least a relief rally. And then be very careful with that relief rally. Take your profits really fast and keep your stops really tight. So until next time, hey, join us tomorrow for the Trade Your Way to Wealth and Financial Freedom. We'll be taking a look looking for some stocks, because it's always good to have, at least in your back pocket, what you want to trade once the market strengthens up. So aloha, God bless everybody.